Hey guys, just getting things set up. Hold on 2 seconds. All right, how are you doing today? Let me turn down the music a little bit. Got a little funk going. I will be turning some things up. However, we are going to be watching a couple video clips. Oh, you know what? There's a little bit of backlight. Hold on 2 seconds. Let me fix that. All right, much better. There we go. Don't look quite as backlit. So we are going to go over the watch list. I did do the live stream this morning, first Friday, free live this morning, but we're going to go over a couple videos. Let me get them primed so that we have them set up, because I want you to check them out because it's influential into what is happening with SIVB. Easiest way is just going to be right from my Twitter profile. So let's head on over. Let me pull this up over here. You guys can see my screen. Awesome. Let's go right here. Let's pull this up here. All right. So first up, this is from a video that I did. Hold on. Let's pause that. This is from a video that I did back, oopsies, in January 12th. I think it was January 12th, right? So let's take a quick little listen. Let me turn up my volume here because I usually have my volume turned down on my computer. Oops, that's the brightness. That's not the one I want. Volume. Okay. All right. So let's see. Maybe it's going to be too loud, but here, let's have a little listen. Can you hear it? If not, it is right on my Twitter. Can you guys hear that? It's all about basically what is happening right now with, it's what's happening right now with, let me go to the real video. It's what's happening right now with SIVB, silver. Why is that so low? Let's try it here. I really want you guys to hear it. So the FDIC does not have confidence. How come it's so low? Volume is up. How come my volume is not playing loud? There we go. That's what I need. No. All right. You're just going to have to listen to it. For some reason, it seems like it is lowered when I am playing the videos. So ignore that. Let's see if this one works as well. It's playing somewhere. Whoop, here's the other one. This one, right here. Let's go to YouTube here. Turn that one off.
Alright, so supposedly this stock is halted. It says trading halted, but you can
this
see
is
there are
SIVB
trades
this
being
morning.
done right now in the dark pool exchange FADF. This is totally illegal, you guys.
Yeah. So this morning, we saw them when they were trading illegally with, hold on, SIVB in the dark pools, right? So anyone that says that the stock market is not manipulated, here is the second video.
Check this out. They are still trading on SIVB. The stock is halted. It's 9:12 a.m. It says trading halted, but look at
The
all
trading
these
was halted
late
at
trades coming in.
8:35.
The FADF at 62.60 in the dark pool exchange. This is so illegal, you guys.
I will put the links in the chat, the comment section down below the video right now. Let me grab that right now. So I'll put the SPY up. I will grab those video links for you. You know what? Even easier, I'll just grab the Twitter stuff. So here we go. Copy link. And okay, sign into chat, open in web browser, pull this down here. You got it. Okay. So that is the one about SIVB, and the other one that I posted this morning that, hey, you might want to have some cash on hand. It also just came out that the FDIC is seizing. Here it is. Let's see. Where is it? FDIC. Let's retweet it. And you will see that, boom, FDIC will retain all assets from Silicon Valley Bank for later disposition. This video right here talks about the FDIC insurance knowing FDIC meeting video, where they knew all about the bank runs that were coming, but they didn't want to warn the public. Is that fair? I mean, is that truly fair to turn around, have a meeting, and not tell the US public? I think that's pretty disgusting, right? So today, with the trade setups, right? I did do the live trade setups. If you were following me live this morning, you knew below 389.50 potential trade right there. Yes, we hit 387.40, a nice $2 move to the downside. The Qs as well below 292, yes, hit down to 289.50. However, we even hit even lower, 289.13, right? With the Russell today, we came down to 177.01 midday, right? This is a basket of 2,000 stocks versus 500 with the S&P, 100 with the Qs, and 30 with the Dow. So the Dow is the most easily manipulated stock index. And then we have the SPY, the Qs, and the Dow, right? So let's check out and see what happened with Microsoft today. Pretty much everything, oopsies, helps when you type it correctly. Can you guys hear me? Microsoft, let's look at it on the big screen today over here. So we're hanging around these moving averages. My blue dotted is 200 exponential. The pink dotted is 33 exponential. There was just a whole bunch of moving average mess, right? It looks like spaghetti, yeah, but the algorithms are set up on them. So now we are below this 33. When we were below it over here, boom, it dropped down. We had a nice drop of, from right here, 254 down roughly 3%. So if we have another potential 3% move, remember that Microsoft is one of the top holdings in the SPY. SPY and the Qs. This could be heading down to 242.50, if not lower, which would also give us roughly a support area right over there as well. Let's look at NVIDIA. NVIDIA had a bigger drop down pre-market. Let's make it a 15-minute chart here. You know what? Let's just do this. Put 15 minutes on this side and we'll hide this. Done. Much easier to see. Came up, hit our 200 exponential and 161 exponential, dropped, came back up, tested it again, pulled down. We have a bit of a wedge forming. I'm not sure if you can see it. I see it. Boom, boom, right? Where are we going from here? Is it going to break out to the upside? Is it going to break down? We will see. We are below the 33 exponential. I like to use that as a gauge of where we are looking for support, oops, or resistance. I've hit the desk the wrong direction. There we go. So looking at this, let's see if this upward trend line fails, as it does look like we have overall bigger downward trend once we drop below the 161 and the 200 exponential. Let me take those lines off. All right, beautiful. Let's check out Meta, or old Facebook. Used to do face plants as well. So with Meta today, little short trade down below $1, actually 40 cents, $1.20 to the downside there, and a little tiny up trade, just 75 cents. But you could have traded it both directions today. Nice opportunity there. When I do create my watch list, I also have this on my website at cjanetrade.com. With this, you can see 28 potential trade setups to the long 14 and to the short 14. These are the highly active stocks pre-market. Don't know where they're going to go. The longs mean, hey, it had gapped up for the day. You know what? Maybe I'm just going to put gap up and gap down. What do you think? Up gappers and down gappers. That's good. I like that. I'm making a change. Because it doesn't mean that it's going to continue in that direction. It could fill the gap, right? You could either have a gap and go or a gap and fill. So the up gappers, hey, maybe they're going to gap and go to the downside right here. You'll never know until the price action happens. So with Tesla today, had a little bit of a lower trade when we broke below 170.40 down to 168.40, $2 potential gap to the downside. And I put my levels up above high enough today so that people would be protected. They wouldn't get caught in all of this churning. I'd want to give you that higher probability trade. So that's why it's all the way up here at 177. Little bump up to 177.12. Yeah, okay. They took a little move up. Actually, 178.29. 177.12 is an old level with massive volume. Let's look at Apple today. Apple, I'm not liking my position today. It is really holding this downward trend line over here on the daily chart. So we're going to see if we exit below right here. I think I'm going to take my loss on that one. I am waiting to see if it pops up, but I'm not feeling so secure. And I'm going to show you why. Let's look at the banks. First of all, today, SIVB, right? This is not looking pretty, right? Look at where this was in the past. All the way at 300. Now it's down to $39. Right? 3 days, it went from 266 to 39. FDIC just came out and said that they are going to take over their collateral. All right, no problem. How about JP Morgan? Well, JP Morgan's recovering a bit from yesterday. But when we look back on this, overall, let's look at them on the weekly chart over here. Right? This surged higher. And now we're in a bit of a downward trend. Right? Let's create a trend line here. Boom. Right there. This is set up from October 21. We hit the trend line this week, boom, broke down. We're hitting the 33 exponential right as we speak. If we break below 126.90, watch out for JP Morgan. How about Bank of America? So Bank of America today down as well. Weekly chart, let's throw a little trend line on there too. No. Let's adjust this. Right there. All right. So downward trend, right? Looked like we were making some recovery, but we have broken out of the downward little wedge right here this week. Not looking so good, right? Bank of America going down. Citigroup, oh, very similar. Yeah, we still have inflation. Yes, we still need to raise interest rates. Okay, great. There's jobs that are doing well, but we're really not eliminating inflation. What does that mean for banks? What does it mean for defaults, right? In January, we saw defaults on mortgages at the 30-day stage. Likely we're going to see them increase. How about the job cuts? Yesterday we had job cuts for the Challenger job cuts only at 410, 410%. Oh, that's a positive because it's not 440. When we look back in time, we're still higher than we were in most of 2020. They're still cutting jobs. What does that mean? That means future defaults. That means future debts, right? That are going to be not unpaid. And we had Credit Suisse say, oh no, sorry. We had, not only are we having massive withdrawals out of capital, out of our bank, which means leverage for trading, because banks only make money when you have your money in the bank. If people are taking their money out of the savings, the banks no longer have money to trade with, right? Because when you put it into the bank, it goes on their balance sheet. You say, hold this for me. I trust you, bank, to hold this money for me. Well, you just saw one bank go down in the US. Are you really trusting the banks that much now? Right? Silicon Valley Bank. This is talking about where Google was started. And now we're starting to see all of the banks starting to go down. Wells Fargo, wow, it's up today. Wells Fargo just closed all of their mortgage facilities, right? They just closed them all. How about BlackRock? Ooh, BlackRock is not looking so pretty, is it? Right? BlackRock is looking pretty bad. Wait, doesn't BlackRock have more collateral that they trade with than many small countries? And this is going down. Well, the market's going down, so of course this is going to go down. What about their leverage? When these banks start to fail, it can affect BlackRock. It can affect everything. So watching the banks, we saw what happened in 2008. We see the mortgages that are defaulting. All of these banks now are trending down for the past couple of weeks. That's American Express, CME Financial Group. This is on the weekly chart that I'm setting up these trend lines, right? Chubb Limited as well. Excuse me. US Bank. Whew. Yeah. That's not looking so pretty, is it? That's really looking kind of ugly. I want to do a parallel channel on this one. Change my parallel channel to be red. Maybe we're going to find a bottom down here at 35. Truist Bank as well. Let's get in on these channels. Moving down. That's all of the XLF holdings. Pretty much everything is in a negative momentum. Berkshire, let's do this. Let's give it the benefit of the doubt and say it's only going to come on to here. Maybe down to 290. If it goes down to 290, potentially bigger moves down to 272. All right, let's check out Google. Google today, little upward action, and then we came down just like the rest of the market, right? Let's look at Oracle. Oracle had earnings today. A little bit of a recovery, potentially up to 86.20. Came up almost to the 4 exponential moving average. Still potential move down to 81.15 over here in my opinion. Let's look at Schwab. I heard a rumor that Schwab is insolvent, right? What does that do for all of the people that have trading accounts at Schwab? Are they going to be able to get their money out, right? This sort of movement on the banks, let's go back in time. When have we seen this big of a drop of 22% in 2 days, right? How long ago has it been that we've seen 22% drop in 2 days? I don't think we've seen that recently. Maybe 2020. April of 2020. March 3rd. Oh, okay, maybe this is right here. Let's go. Let's see. Nope. 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 Not even back during the pandemic did we see that for Schwab. 2 days. Is there a reason why it's down so much? Right? Let's go to Charles Schwab's stock sell-off deepens. Morgan Stanley calls it overdue. Charles Schwab down 8%, on pace for the largest percent decrease since April 22. Drops on report of block trade offered via JP Morgan. Hey Asif, how are you? 750 million recruiting move that went off the rails. Schwab fire sale at Salvo at SEC on trading overhaul. Electronic trading firm Citadel, we're deeply concerned that the commission has simultaneously issued far-reaching proposals. SEC did not immediately warn. Okay, that's with Gensler. But what I'm trying to tell you is you've got some major brokerage houses. We've got Raymond James Financial, right? Raymond James Financial today alone had massive volume in a dark pool print. When you start to see that the stocks are down 20% in 2 days, that should be an eye-opener. You see one bank that has gone under, the FDIC, in January had a meeting. Maybe I can play it louder on my other computer. Let's try that. Let's see if you guys can hear this. I put the link in the chat already, but let me try it one more time because it's so, I want you guys to be able to hear it. And for some reason my computer, oh, hold on. Let's get back. Helps when it's on play, right? Let's take this. Okay, play. Oh.
So the FDIC does not have confidence.
They know the FDIC insurance is there, they know it works, but we're not going to tell them about it. It's not working very well either. I don't know why it stifles the volume here. What I'm trying to say is pay attention, right? Set your stops up for your stocks. If you're in some S&P 500 stocks, whatever your stock you're in, if you're in a longer term holding, in my opinion, listen, I'm not a financial advisor, but we've seen a couple crashes, we've seen some dark pool volume, and when we start to see things that stand out, that make you go, wait a second, this is abnormal, like a FDIC coming in and bailing out a bank. When was the last time we saw that happen? 2008. Silicon Valley Bank, SVB, right here, SVB.com. Silicon Valley Crisis Bank. Everything you need to know about Silicon Valley financials. FDIC shuts down the bank. It's done. I'm going to snag this photo and put it on the video today. This is the beginning, right? This isn't a canary in the coal mine. This is going to likely be a domino effect. So how do you prepare yourself, right? What do you do to prepare yourself if this were to be your bank? Next, money, medicine, food, water, right? We'll be able to survive things. However, have you prepared yourself? That's what this is all about, right? You have any stocks you want to check out in particular? I'd be happy to check them out live for you right now. Just put it in the chat. I recognize that there is a delay in the live stream. So I'll give you guys just a couple seconds. But just be aware, right? I've been studying the banks. I have been studying, this will help you. This will help you see something too. Federalreserve.gov. Okay, let's go monetary policy, click. Let's go reserve requirements, click. Okay, announce March 15, 2020. Right here, this says it all. Right here. Let's make this full screen so you guys can see it. Net transaction accounts, percentage of liability requirement, 0. Goose egg, nothing. Non-personal time deposits, percent of liability requirement, 0. Nothing. The banks are not required, as of now, to have any reserve requirements according to the Federal Reserve. As of March 26, 2020, the low tranche reserve ratio of 3% was set to 0. The higher one's set to 0. All right? Change reserve requirement ratios to 0. 0. Big old fat goose egg. Nothing. SIVB is just the first one to show the U.S. public that the banks don't have money. Right? If everybody were to try to go to their bank, to their brokerage firm, and get out the money, it's not going to be pretty. Do you want to be that last person holding the bag from the bank that's empty? I don't think so. Right? So, sorry to be the bearer of bad news of what I see, but I'm seeing it with a lot of volume in bank stocks. And this line right here shows where the biggest volume was traded. For what you see on the screen, Raymond James up above. Time for gold, yeah. Let's look at let's look at the gold futures. Correct, I just spoke about it with Angela Miles. Gold futures moving up. Silver futures moving up, right? This is a scenario where holding gold and silver coins that have held value over time could be a good thing, right? Physical assets as well. Thank you, John. Yeah, stock brokerage accounts, at least in the US, do not have any FDIC insurance, right? Go over FDIC insurance. Check out what you have. There's CDIC insurance in Canada. Check it out. See what's covered. See what is insured, right? You've got it right here. FDIC named receiver for Silicon Valley Bank. It's the first one. I told my husband, today is a momentous day. This is the first day of everything happening. This is a momentous day. I kept saying the banks are going to crash. The banks are going to crash. I can see it. I can see it on, like, in black and white. 0 reserve requirements. Credit Suisse is talking about losing their deposits. They've had a breach, and now their depositors have all their private information is released. Then we have the banks. Morgan Stanley caught up. No, it was JP Morgan, caught up with Epstein's information. We have Silicon Valley going under. Like, there's so much. Interest rates are going up. People are starting to default. They no longer have leverage because of swap abilities. Like, there's so many things it's a giant snowball that's ready to crack, melt, whatever you want to call it. So just be prepared. Know your stops. In my opinion, know your stops. Yeah. Because they're allowed to. That's the way that the law is written, ASIF. ASIF said in 2008, stockbrokers took the money from the accounts. There's no FDIC insurance on it, right? It's 100% risk when your money is in the stock market. If you convert it, is there 100% risk? No. If you own a physical asset, you own it, right? If you have physical, tangible, silver, gold, jewelry, coins, whatever, guess what? You own it. It's not in a bank, right? So just some food for thought. Maybe think about it over the weekend. Maybe we're going to see some more news about other banks like Charles Schwab going down 20%. Raymond James, maybe Vanguard, maybe BlackRock. You know how many people have their savings in BlackRock? They manage so much retirement money. So just a heads up, if you guys ever have any questions, you can email me at jane@cjanetrade.com, or also at carpeprofit@gmail.com. I hope you have an amazing weekend. Be prepared. Trade the stock price action, not necessarily in the news, not necessarily my opinion. This video has been all about my opinion. Check out the 2 links that I will put into the comment section as well of those 2 videos. For some reason, they would not play to full volume level on my computer when I'm trying to record. But I want you to hear the information. I want you to hear it from the FDIC meeting, the words that they were hiding from the public. There's a good chance that the little video that I put up this morning will get taken down because the original one that I heard it from did get taken down. So make sure you listen to it, and you listen to it soon, because hearing it from the horse's mouth, as they say, is just, it means so much more when they say, oh yeah, we see it coming, but we're not going to tell the public. Really? You don't want to warn the public? Aren't you supposed to be in the best interest of the public? All right, enough about that. Have an amazing weekend. Carpe Profit, seize those profits, one trade.